And welcome to The Trading Wife. Good morning for those of you out here on the left coast, and for those of you out there on the right coast, good afternoon to all of you. Just going to go ahead and stick to the charts again today. This is an easier way for me to get this going quickly. Takes a little bit more work to get myself on camera, and got a lot going on. It's the end of the school year. So it tends to be a bit cumbersome with time and things to do. So we'll just go ahead and stick to the charts, and hopefully you'll enjoy that and be able to get a lot out of that. Just to remind everybody, I am the Trading Wife, and I want to thank BTFD TV for the platform to do these presentations, these webcasts, these shows. This is just a really great platform, and we're grateful to have this opportunity to be able to do that. My website is www.thetradingwife.net. If you'd like to reach me by email, please feel free to send me an email, thetradingwife@gmail.com. The Trading Wife is all one word. And you can follow me on Twitter @thetradingwife. And without further ado, we'll go ahead and get onto these charts here. I have Taser up here. Yes, Gigi, Goofy Golfa in the chat room just reminded me that the right coast and the wrong coast, which for those of us who are keeping stock market hours on the West Coast, it really does feel like it's the wrong coast because the hours are abysmal. I basically roll out of bed and get straight onto my computer, and my family fends for themselves in the mornings now because it's the only way I can make this work. And I'm pretty much tired all the time. So trying to give myself a break on the early mornings, because it is a tough thing to do. And as far as swing trading is concerned, doesn't really affect me too much. Generally, I like to let things settle out anyway when things open in the wrong direction. And certainly we've been seeing a lot of whipsaw action this whole year, actually, since the beginning of the year. The indexes have been very volatile, whipsawing, as we had mentioned a few times. I think it's 13 times now up and down so far this year through the 50-day moving average, whereas in all of 2014, it only did so 7 times back and forth. So that's clearly a pretty choppy whipsaw market, and that has made it really tough for swing traders, including myself, to gain ground on this market this year. But things are looking better. Looks like we might be getting onto a trend. Of course, as soon as it really seemed like we were doing that with the SPY, I'll go ahead and put the SPY back up, I guess. I was going to start with this Taser because it looks so nice, and somebody in the room just bought it, but we'll come back to that. So looking at this SPY, the moment that this broke out of this top line, this was this ascending triangle here. You can see uptrend, right? Whether you started from way back here, this is the much longer trend that goes, I think, all the way back to 2009, or whether you have this shorter term uptrend. Either way, we had this flat line on top that created this ascending triangle. And as this started to rise, it continued to consolidate and hit that top line, and it just kept getting choppier and smaller and consolidating smaller and smaller and choppier and choppier. Finally broke through that last week and appeared to be on the right track, staying above the 80 MA, which is, as those of you who follow me know, is my trigger line, and looked to be finally breaking out of this choppy pattern. Well, lo and behold, Tuesday came around. Monday was a holiday. Tuesday came around, and the market just fell back down and whipsawed back to the other direction. So it's still a bit of a crazy market. Then, yesterday it came back up, closed at a higher than the previous day's open. So it completely negated the sell-off from the previous day. Today it seems to be consolidating all of that volatility because it was just a crazy move. So that's what we're currently seeing in the SPY. That said, a lot of positions are doing just fine. And at this point, kind of holding through some of this volatility seems to be the way to go. Taser, back to Taser before I forget. Raj got into it this morning, talked about it. I know that it was still below the T line when we were talking about it, and I said you could get into it or you could wait till it gets through the T line. Either way, I think it has this support here that was once resistance, broke out of that, and has been keeping that level as support. So clear level of support here. Easy risk reward is currently a TBF, or a trader's best friend, which was a term coined by Stephen Bigelow to denote a doji followed by a gap. So a gap to the upside from a doji is bullish, and a gap to the downside would obviously be bearish. The doji represents indecision. So when you have next candle, the move on the next candle tells you what that decision has been, what the decision that has been made. As far as a doji, for those of you who don't know, I don't think we've ever really talked about the candlesticks themselves a lot on this show. I kind of presume that most of my followers, certainly the people in my chat room, know a lot of these candlesticks already because we talk about them so much in the chat room. And whenever anybody has a question about specific candlesticks, we always deal with that directly right away. But just to that, those of you know who might be watching, who might not know, a doji is a candle. These are all candles, your candlesticks here. These are all candlesticks. And a doji is a candle that does not have a very significant body or any body at all. This is the body of the candle here. And so this is a doji because it barely has, I mean, you can see it has a tiny little body, but not enough to be anything significant. The shadows or wicks on either side are bigger than that body. That's a doji. This candle here was a hammer, which seemed to denote that bottom at that support line. This one is as well, which is interesting. So likes to put in hammers on this support line, then put in this doji and this gap up, and is now through the 8 EMA. So that's a bullish chart right there. Let's go ahead and take a look at the other indices. This is the diamond, which is the ETF for the Dow Jones Industrial Average. This looks pretty much the same as the SPY, except that it's below the 8-day moving average, the exponential day moving average, the T line. But it's still in this ascending triangle. It's still above this trend. This trend line looks kind of funky though, doesn't it? Let's see what we can do to, yeah, that's not a good trend line, is it? Let's fix that up there and kind of make that a little bit better. And you know, you could have a trend line there, you could have a trend line here. These are all, you know, interim. Sometimes I have too many lines on my charts because there's really so many options to be drawing trend lines. Still about the same area. You have that 50-day moving average in there, which is that dark blue line, and it created some support. The yellow is the 34 exponential moving average. So some support in here that's clearly holding this up. I think this is basically doing the same thing that SPY did after it whipsawed down, then it whipsawed back up, and now it's just consolidating all of that volatility. Small caps, IWM, same story. And it's nice to see this above the 8 EMA as well as above the 50. The 8 EMA and the 50 are crunching together there. You can see that in there, but this is looking pretty healthy to me. Kind of a cup and handle in here. See that? Nice uptrend again. You could definitely draw a trend line here. Look at that. That's a pretty nice trend line right there. Also sort of that ascending triangle, although this one has been messier. It wasn't really touching that top line as directly. It sort of had these little cushions of resistance and support, but still looking like it's just consolidating the recent moves and going to move on. Taking a quick look at the Qs, which is the Nasdaq, you know, same story. This actually really popped up nice and high. I think I would move that probably to there. So it has this level of resistance here that it's working on, but it's above the 8 EMA. Yesterday's move higher truly negated the previous day's down, and we're above that open from Tuesdays, even today with this little sort of spinning top candle. So it's a spinning top candle if it has more body, basically like a doji with more body. We call that a spinning top candle. Okay, so those are the indices, and you saw Taser. So let's go ahead and go down. We'll first go with all the positions in my portfolio, and then we'll move on to some of the requests from you folks at home. So here's the XIV. I added to this here right before this closed, and that has worked out nicely because it's continuing on this uptrend. Did that up move yesterday, kind of created this little J-hook pattern working in here. I think it's just, again, consolidating the big move, just like the indices. And so we'll just keep looking at that. Apple, same thing, right? I mean, Apple's just following these indices as well. Made that huge. It really took a huge hit on that Tuesday, but then put in actually that's a bullish Harami, a very large bullish Maribozu Harami, and is just sort of holding up now above the T line, little inside day. Again, I think just consolidating a lot of these big moves in here. We're not seeing a lot of movement in a lot of these stocks today because they're consolidating the moves that have happened over the last couple of days. That was a lot of volatility going whipsawing down so hard and then back up so hard. Okay, this STM, this is a French semiconductor company. So when you see all these gaps in here, the reason for those gaps is currency. Not this one, obviously. That was actually an announcement or earnings, I think it was, that popped that down. But these other gaps in here are because of the currency changes, the euro versus the dollar. And as we all know, that's been a lot of volatility in the dollar of late, as it has continued rising and whipsawing as well. But very, very strong dollar we've had of late. And the euro has been dropping due to euro QE, which has been helping the dollar. So all that's good. This STM here. What I like about this STM is it's now out of this range. It's into this gap, this big pocket of volume with this gap. And so I'm looking for it to come up here to, at the very least, the bottom of this candle, which is 909, but more likely to the bottom of this. I don't know if you can see this volume at price bars that I have in here. Let's do it and take this line out. It's kind of in the way. These dark green and red lines that are coming out here, these bars in here, that's volume at price. That tells me what kind of volume there is at a particular price. So up here in this level between around 917 to about 954, there's a lot of volume at price in here. That means we're buyers and sellers coming in. In this gap, there are no buyers and sellers coming in. There's no volume at the price in here. There's very little. I mean, it's very diminished, and it probably is from way back when or from whatever we have right now. So the likelihood that this is going to whoosh up to this, 917 area is pretty good. It's had popped up higher and has pulled back and is now sitting right on the 34 EMA, but I don't think that's any significant resistance for it. I think it's just a place for it to pause because that was a pretty big move in there. So there is STM, yes, STM into the volume pocket. Ta-da! Okay, PEIX, this crazy little stock. One of the reasons that I'm in this is truly because my husband is very bullish on this. Fundamentally, it has taken a big, move down, a big kick down, and it has lots of room to go higher. So it's on this trend line to the upside. I'm using this trend line as my major support level. On the weekly chart, you can see that this actually looks pretty decent, right? It's staying on that trend line. It's right on the 8-week EMA, and then when we pull it down to the daily, while it is below the 80 EMA, it's sort of crunching this level in here between support and the 80 EMA. And this is, why did I put this line of resistance in here? What is that based on? It seems to be, it should probably be a cushion line in here that's kind of like from there to there. Of resistance that takes it up to that 200-day. Clearly, it's been rejected a couple times now at this 200-day. So it seems to have some issues with this 200-day and probably just needs to consolidate this line a bit more to get up through that 200-day. But I will hold this as long as it holds that trend line. XPO is doing just fine here. Flagging out from this move when you see this more pulled back, that you can see that that really kind of looks like a little flag trying to sort of J-hook action. This was kind of a scoop in here because that's kind of a straight line and then a little scoop and then it went higher. And it's just sort of holding on, riding the T-line for the moment, staying above it, doing a pretty decent job. So looks like it's still building up steam and getting ready to hopefully push out of this. I use the word hope, which I always say we shouldn't use because that's hopium is not something that we should trade on. But when I say it in this context, I just mean that, you know, I'd like to see this pop up through there and break out. And if it doesn't, if it breaks down, I drop it, and that's it, you know, so it's not a big deal. AMCX, this I think has been doing well on the trade, the Time Warner deal, Time Warner and Charter, which sent Time Warner, let's see, take a look at Time Warner real quick. TWC. Yeah, see, it did that. It did that on this deal, and now it's consolidating it. So the AMCX was nicely helped by that, even though it's not a cable network or a cable company. It's an actual network, and it's looking really nice here. It had this doji and then this hammer and then this move higher. So these are all bullish candles. Today it has a nice open candle. It's just sort of consolidating the move, letting the T-line catch up a bit. Looks really nice. AMAT doing what I expected to do, actually just sort of popping off of this 80MA. And again, this is another one that my husband likes from a fundamental perspective until Semicon. So I thought it would be pretty good until Semicon, which is in mid-July. So that's, you know, a good 6 weeks worth of time that we have to see this move up. Would like to see this get into this volume pocket a bit more here. See if it can get above this level. It started to today. What is this, 59? What did we have here? 60. So just popped above it and stopped right there. So that's our clear level of resistance in there that we're working to get through. But I also urge you to take a look at this pattern in here, how it's, you know, it had this curve up and then it pulled back just a little bit, but on a higher level. And then it's curving back up. So that's a nice pattern. I like to see that pattern as a bottoming pattern. And I'm looking for this to break out of that resistance level. And I will hold it as long as it holds the ADMA pretty decently. Hymax got into yesterday with GG. I saw GG got into it. And I've been watching it for a few days, mentioning that I think it's finally setting up again. I think a few other people have mentioned it as well. So holding above the T-line, consolidating this move in here where it broke out of this resistance line in here. And I think that it's just at this point consolidating and setting up to go higher. It's also a rounded bottom breakout, which Gigi talks about, one of Rick Sadler's setups, where the ADMA comes up through the 50-day moving average, the 34 EMA, and in my case, the 21. I think Rick uses the 20. I like the 21 because it's a fib number, along with the 8 and the 34. But holding up nicely after the ADMA came up through that. So we're looking for a move to the 200-day moving average. That's part of the setup with the rounded bottom breakup, or RBB. Okay, going through chart requests. So I have some up here from Raj. Raj has some first. He's been loving this CMG for some time. Let's pull this out a bit. So certainly I think we all know CMG is a really good company. We all like CMG as a company. I posted in the room the other day, there was and I don't watch CNBC. I don't watch Mad Money. I don't watch any of that stuff. But I had seen a clip on Twitter that somebody posted of Mad Money, Jim Cramer, talking about CMG. But the thing is that he was interviewing a general manager, apparently CMG's biggest or or most profitable general manager of the most profitable store. And this kid's like 19 and he's doing really well with the company, and he, he gets bonuses and stocks and so on and so forth. And so they were just talking about what a great company this is, both from an employer perspective and also as a consumer. I think that there's definitely a movement for healthier, more natural foods, and Chipotle has made a huge effort to, use grass-fed beef and organic chicken and organic ingredients, and they're doing a really nice job, both both in terms of taking care of employees and being a good company, as well as providing what the consumer wants. So clearly this has taken a pretty strong hit the last few days. This is not a great looking chart in here on the daily. Sorry, I needed to take a sip of water. But I know this is one that you like for a long-term basis. So if this is something that you feel you want to hold long-term, I think you can take a look at things like these levels of support here. Clear level, this was resistance here, then support here. So didn't quite come down to test that far down. This might be a cushion of support that it's sort of working with in there. That sort of reflects this top line a little bit, and these two lines below a little bit. So perhaps it's just fallen into the zone of support. It has currently popped back up through the 80 MA, but we've seen it do that multiple times and still continue to get rejected. For me, the pattern at this point is still a dreaded H pattern. It's still a down pattern, and I don't know that the fact that this candle initially negated all three of these black crows almost, right? This one's not quite a Maribozu. It would normally be 3 Maribozus to be 3 black crows, but pretty bearish looking candlesticks in there, big moves down. I'm not really sure what the news was. Clearly this needs to do some work to sort of get out of this. I'd like to at least see this get out of this level here, to keep it from being an H anymore, because at this point that's where it's an H. It would have to get above that level there, approximately. Yeah, 639.50 was the high that day, 639.88. So I've drawn this line, 639.78 in that area. You want to see that get above there, I think, before it starts heading back north. LinkedIn. Whew. Okay, this is another one. It's rounding at the bottom. I'm loath to get into stuff before it really shows that it's done going down. I know that, Raj, you tend to be more of a resistance and support trader. You like to buy support levels, and that works really well for you. You have a knack for calling them. That your mindset is that. I think there are traders who have more of a trend mindset, like myself, and there are traders who have more of a support resistance, more of a revert to mean mindset. I certainly recognize that both are true, and both work. So if it works for you and you have a strategy for using that, then that's great. Personally, I like to wait to see confirmation, because all too many times I've seen these things do, this come up to the test, the T line, make it look like maybe it's going to reverse higher, and then just reject it, because that's, it needed to consolidate to the T line in the same way that a bullish chart would consolidate to the T line before it goes higher. A down chart consolidates to the T line before it goes lower. So I'm not convinced that this is done going lower. This could just be a bear flag in here. This actually looks like a bear flag to me. If I draw this line in here, this looks like a bear flag to me. That's not to say that it won't recover and go higher. This is nicely curved. This could be, an indication, this was a bullish engulfing in here, that it's ready to go higher, but I don't think we know that yet. And so I think this could still go either way. If you're a really strong support resistance trader, I know that, Raj, you like to buy support, and then you put your stop right below that support. If it works, it works. Again, I always say that even the best traders on Wall Street are only right about half the time. So you're probably even on this resistance support stuff. I know there are very profitable resistance support traders, so it's probably about the same. Regardless, every stock picker, you're not going to do much better than 50-50. So the key is to stay in the ones that work and drop the ones that don't. And whether you prefer support resistance or to get on a trend is certainly your choice. But in here, I think this has certainly a lot of room to move higher once it gets back up through here. I would wait to see what this does. Certainly keep it on watch and see if it rejects that and goes lower, or actually, decides that this is, this could be just its first curve up, and then it does this sort of thing, right? Until it goes up to the other moving averages and possibly to fill this gap in here. What was another one we have is Twitter. Same thing on Twitter. I think this chart looks better because we have this big Marubozu candle through the T line off of these dojis, and this is a cradle pattern. It's not a straight cradle pattern, but it's definitely a cradle pattern. You have this flush red candle down, 4 dojis, Marubozu candle up. That is a cradle. So that is a buy signal, and it is through the ADMA. This chart I like a little bit better than LinkedIn because we actually have a buy signal on it. LinkedIn, I don't think. Well, yesterday's candle was a left-right combo. You had a doji the previous day followed by a bullish engulfing, but that's not confirming yet. So I would certainly wait to see that confirm. And I would say the same is true for Twitter. If it goes higher tomorrow, you buy it. Or you buy it here and you place a stop below this low or below yesterday's low, or even below the ADMA if you want a shorter risk profile, although the low of the day is 36.37. That's pretty easy on a $37 stock. It's less than $1, so it's like less than 3%, and a huge pocket of volume here with this candle. Once it gets up into this pocket, which starts at about 39.33, we should see it whoosh nicely. I don't know how much this one counts in here. Must have really seen some volume at the end of the day when it popped up off that bottom after bad earnings. And then you could probably see a move to about 45.60, but would prefer to see that confirm, although it's definitely putting in a buy signal in here. Not only is it a cradle, I think it might also be, it is also a trader's best friend. It's a gap up from the doji and all those dojis in there. So certainly one to be watching. I like how this is setting up. I don't think I'm ready to buy it today, but I do like how it's setting up. Whole Foods Market is one. I need to find an entry because I spend so much money at this company. and it's the only grocery store that I use. I don't buy a lot of groceries. I mostly buy foods directly from farmers and farmers markets. Oops, I didn't need to move that. I want to keep that there actually. And I want to put this here, clear cushion in there, right? Let's see, this should be at the bottom of this candle, which is 43.37. So let's move that to 43.37. Oops, one too many. And we can see that there's a definite cushion of support in here, but we need to see that get out of there. I'm definitely not getting in here. This is definitely could easily be rejected by this T line at this point. Could easily be, just a dreaded H in pattern in here. So we definitely need to see that move through that T line. Goofy Golfa says Twitter is almost, but not quite a pinball play, as there is only 9% to the 34 EMA. So this is certainly, I think out of all of these, this is my favorite one. Certainly, I think this is the strongest one out of all of those that Raj has mentioned as far as charts are concerned. Okay, so moving on to chart requests for Lance. And let me just go check Twitter real quick. For those of you watching at home, I am watching Twitter. So if you have any chart requests, you can go ahead and send them to me on Twitter. You can also go ahead and email them to me at thetradingwife@gmail.com. I'm checking both every few minutes to see if there are any requests there. So far, I don't see anything. I do have a couple of retweets on the show, so I know some of you out there are watching, and I appreciate that. Thanks for tuning in. Happy to chart any particular tickers for you. If you're interested, just go ahead and throw those into an email or a tweet as well. Hain. So speaking of Whole Foods, this is a company that makes a lot of these natural food products, distributes them. This is something that we've been looking at for a few days. I think Lance brought it up back here somewhere. It was a doji sandwich or multiple dojis and moving higher, running on the T line. Even this red doji was just another doji right above the T line. Yesterday was crunching with the 50-day moving average, the dark blue line, the ADMA crunching with the 50-day moving average, and is now popping through it. So regardless of the fact that I see it's pulled back a bit, it's holding that 50-day moving average. This pullback may just be a pullback opportunity, you know, a chance to get in. I think that you could still put a stop easily below the ADMA. It's only a 63 cent move to the ADMA on a $62 stock. So we're talking only 1% of for as far as a risk profile, you know, or you could use, you could bring it down a level even and give yourself more room because it's such a small risk. I think that this makes a whole lot of sense to get into. I think you could easily do a long-term on here. This is sort of a head down here, and you have the sort of two shoulders going on here. I don't know if it's really a clean head and shoulders pattern, but it certainly has this, you know, dip down, dip lower, and then start to make dips up. So I like the pattern. I like where it is in terms of the moving averages. I like the company. Hain is a yes for me. PIR, Pier 1 Imports. Woo! That's not looking so hot, is it? Been watching this one for a while. I haven't really shopped here in a very long time. It's funny because I used to love this store, and there's one not too far from me, but it's also not too far from a Cost Plus World Market. And the day that I went into that area, I went into Cost Plus, and I didn't go into Pier 1. I don't have a reason for that, other than I thought maybe Cost Plus would have more for better deals. I'm not sure if that's true. I have to apologize for the truck outside, which is clearly backing up and making horrible beeping noises. I don't know how obnoxious that is on the microphone, but hopefully it's not too distracting. Today's candle on this Pier 1 is a bearish engulfing of a bearish candle. So that's definitely not pretty at all. I'm not really sure what's going on here as far as news. If you're in this, give it to the end of the day, but don't stay in it unless it, I mean, you know, it's up to you. If you've been in this since here and you're on this trend line and you want to give it more room, it's not really a great trend line, but it's sort of a trend line, or you could bring that down here, I guess. You could give it to there. You could give it to, that's the 21 day, that orange there, but it's already lost the 50, the 8E, and the 34E. This is not a good looking chart. Probably I would say let's take a look at this at the end of the session. If you're in this, it might be crunching with this 200 day. It might just be consolidating all this here. Let's take a look at it on the weekly and see what that looks like. Still not a great looking chart here, right? This is here, you got this dreaded H, and then it looks like maybe it's forming another one. So you do have this little trend line. Not my favorite chart that we've seen today. My first note would be to say that you drop it here and wait to see what it's going to do. You certainly don't get in here. This is not a chart that I'm crazy about. Cree. I'm actually not crazy about this either. And sometimes I'm waylaid by how much I know about fundamentals. You know, I have my husband's whispering. My husband whispers in my ear a lot. His thoughts on fundamentals. Downtrends all around, right? You see there's a downtrend there. There's another one here. I'm not sure You've got that downtrend. You've got this downtrend. So a lot of downtrending lines here, still in a downtrend. Certainly we have seen this base out like this before and then continue lower. Is this a strong level of support in here? It is. So, that's the one thing that it has going for it, is that that's a strong level of support in here. Wanted to put that in here for this as well, because clearly it had dipped down heavier. But this is a strong level of support, and so it's holding that for now. I think we can watch this, but I think it has a lot of work to do. Yes, it's above the ADMA, but we've seen it do that before. You see here and here. So while I think that the ADMA is a great indicator and a great tool for trading, stocks tend to go up when they're above the ADMA and tend to go down when they're below the ADMA. You also have to judge each chart for what it does specifically. And while there was a time when this did go up as long as it was above the ADMA and down when it was below, what it has been doing lately in this downturn is continually testing the ADMA and then falling back down, and then testing it and falling back down, and then testing it and falling back down. Test, fall, test, fall, test. We don't know yet, but this could be a double bottom in here. I know some of you are really good about, really like to trade double bottoms. Certainly you could give this a try and put a stop below the ADMA or below this double bottom level, which would really, in reality, be about 29.09. Let's go ahead and put another line in there. Make that a little mattress of support there. So it's not a horrible risk. And you do have a double bottom, which I know a lot of folks like to trade, but the pattern overall to me still looks bearish. So I would, again, wait on that one as well. WFM we did. GGP. This is a better looking chart. I like this better. I like seeing that it made a bottom and then made a higher low. And then again here is making another wave, trying to get up through this 50-day moving average. Looks like it's crunching between the ADMA and the 50. It also has the 34 in there, the yellow line, rising 200-day moving average. This is definitely a better looking chart. I kind of like this pattern in here. Again, you see this sort of left shoulder, this head, and this right shoulder in here. You have a neckline that is pretty much this. Or you could say it's that, probably. Say that's your neckline, right? Because this is your shoulder. Here you got these little candles that popping up against there. There's your left shoulder. Here's your right shoulder. So there's your neckline. There's your head. Left shoulder, right shoulder. You want to get above that neckline, which coincides with the 50-day moving average. I would wait until it does that. DTV, but I do like the chart pattern on that GGP. Oh, and it's a REIT, so it likely also pays a dividend. DTV, DirecTV, not a bad looking chart, but it is a sell signal today with yesterday's doji and today's red Marubozu candle. If you're in this, you drop it if it closes below the ADMA and wait to see what it does. Certainly it's not a buy today at this point. GTN. If you're in this is where you start taking profits. And I think that you are in this. And you start taking profits because it's showing a pullback. Now, you don't have to close the whole thing, because this could just come down, test the T-line, test the breakout level, and then pop back up. But if you're looking at, from where this is now to where it may come down, it's what is that? 57 cents on a $15 stock. So that's, that's 3-4% that you're going to lose when it comes back down. So what I would say in something like this is where you sell half or a third or whatever, you're comfortable with selling, unless you've already taken some profits, in which case then I would say hold it. And as long as it holds above this T-line. But it does look like it's topped a little bit and it's ready to pull back a little bit. This is where I would say take some profits, but not all, because again, it could come back test this, and there's no reason to think that it won't do that. It's still in an uptrend. It's just a bit extended and now needs to pull back a bit. So completely up to you how you play that. This is definitely an area I would say take a partial profit and let the rest ride and see where it does. Twitter's okay. Oh, FireEye is one that Gigi's been touting for a while. I guess this has now reached his first swing target here. I'm not sure where this entry was for you, Gigi, but definitely these cybersecurity stocks have been interesting and good traders of late. Definite breakout today of this line here. Double doji sandwich. Mentioned it also this morning. Really nice look in here. Let's see where this support level is here. It's nice to have these levels of support drawn in here, just so that yeah, you can see sort of where support is, where this was definitely in a range here for a while, right? Hanging out with the SPY and has broken out nicely today on that. PXLW. Oh yeah, that's a nice move today. You can't get in here now. It's moved too far and is about to bump up to the 200-day moving average, which will likely provide resistance. Certainly it did here, so it will probably do it again, so you can't enter here. Yesterday was the entry. If you entered yesterday, watch it today. It's still going higher. If it moves through that 200-day, you can hold it or take a partial profit and then see how it goes from there. Okay, let's see here. Newswire's FireEye, an IT security company, said Thursday it has priced its private placement to qualified institutional buyers of $800 million aggregate principal amount of convertible senior notes. The offering, which has been upsized from $600 million aggregate principal amount, consists of $4 million principal amount of 1% convertible senior notes due in 2035. So it looks like they've taken on some debt. I'm surprised that that alone makes me say take some profits here, because I'm not really sure. Sometimes these debt offerings are confusing. Obviously, the market's liking this one today. Certainly, I would say this is a good place to take a partial profit and then see what it does with this after that. Disney. I'm a fan of Disney, as everybody knows, and I'm holding this long term, and so is my daughter, and it's in my 401k. And I think this is just a great company, and that, you know, it always has potential to continue moving higher. That's a nice trend line in there from that gap up way back in February. Has done well so far this year. It's just sort of riding the T line. It followed the market with the drop on Tuesday, and then the whipsaw back up on yesterday, and now consolidating that move in here with a little inside day. Great company. I think that if you're holding this long term, you know, that it's a great, you know, look at this long term. Let's look at the weekly, shall we? You can't, how can you, you can't argue with that, right? You can't. So every time it pulls back or dips, that's an opportunity. It never pulls back or dips very much. So I think it's just an opportunity to get in. I'm a big fan of the Disney. So it's right on the T line. This is not particularly a buy signal or on the daily chart, nor is it particularly a sell signal on the daily chart. Although this was, but then it got negated. So, and it held this trend line in here. So I would say, you know, if you don't have Disney in a long-term account, it's certainly one that is a good company to put into a long-term account, and I would feel comfortable holding it. Let's go ahead and see how the indices are doing before we sign off. About the same, pulling back a little bit. It is now at that time of day. I always say between about noon and 12:30 or noon and 2:30, when the main market makers go to lunch and the junior varsity squad takes over, and you don't really know what the market's going to do at that point. I think they don't do as good of a job making the market as the market makers would like it to be. So I tend to say that I try never to close anything between noon and 2:30 market time, which is 9 and 11:30 my time here on the West Coast. So I certainly don't think there's anything significant with this pulling back slightly more, although maybe it's not even really pulling back slightly more. It's just sort of holding on in here, all of these. Let's take a look real quick at oh, that's interesting. I'm going to take a look at that. See, SPY on the 10-minute, it's just going sideways. It's just hanging out in there. That CERE, not sure why I had that in there, but oh, I remember this from yesterday. But the thing is, it was anemic last week, so not something you can trade in here. One more thing I do want to do is see if there's anything left on the, why doesn't this work? Oh, there we go. Okay, so there is the tight J-hook scan. Oh, and a few more have come up on there. So LNW was one that I posted earlier. Really nice look in here, definitely. A little low on volume for me. About 350 on a $4 stock. My minimum is trading $2 million per day. So that means a $10 stock would have a minimum of 200,000 and a $5 stock would have a minimum of 400,000. So this is below 400, below 5, below blah, blah, blah. Below 500K in volume and below $5, below 400K in volume and below $5. So it's below my limit. So this is a little thin for me, but for some of you out there, I think that you're okay with that. So, it really depends on what your own criteria is, how big your trades are, etc. But a really nice pattern in here. J-hook breaking out. CSLT, plenty of volume on this one. Average in the 700s on a $9 stock. Creating a J-hook pattern in here. How far does it have to the, this is also a rounded bottom breakout, right? Because it has, we're at $9, 1021 is the 200-day moving average. So that's 14%, is that right? Yeah, I think it is actually. So that's a nice move that it has to the upside if we target that 200-day moving average. Nice pattern in here on the J-hook pattern. Let's see what this line does here. We could even probably, so, there you have that line of resistance in there. So I don't know, probably not my favorite. None of these are really something that are exciting me at this point, but they are on this great tight J-hook scan. Ooh, there you go. There's a nice looking chart. Big bullish engulfing. Tried to be a belt hold and then became a bullish engulfing on this J-hook pattern. AMAG. Biotech stock. I don't like to trade biotechs, as y'all know, but some of you do out there. So certainly there's the resistance line right there. Something you guys can watch or get interested in if you are interested. SKX is the other one. Oh, we've been talking about this one, right? We make jokes every time it pulls back like 0.5% because it's such a strong stock, and I'm not really sure what this company is doing. I've certainly seen this store in the mall, and my daughter's not into it, so we don't go in, and I don't see them being particularly busy, but this is trying to break out of this here. Nice little J-hook pattern in here, the little dojis in here, and a nice big bullish engulfing today. So you could, this is a buy. If you're interested in this, I'd say this is your buy day. You have very easy risk reward with a stop probably below this candle. The 102.39 from 106.41. That's $4 on a $106 stock. Well under 5%. Pretty easy risk reward, or you could use the T line if you prefer, but I think that it clearly keeps touching through the T line. It does that a lot and then pops back up through. So I say better to use that support and give yourself room on this. I think this is clearly a strong stock, and you could hold it for some time likely. Okay, what are we seeing up here? Are we still talking about FireEye? I think we are. I'm not going to read all of that. And I think that pretty much calls it a day. There's the SPY, there's the taser, still holding above that. That's a really nice chart. I like the way that doji and that move through that ADMA there. And this is another one that has just been so strong when we pull back again. You know, let's take a look at the weekly here. You know, this curved since 2009, started curving up, and it started moving up in 2012. And there's been some volatility in here, but for the most part, it's been in a nice uptrend. Hard to argue with that. So strong company, strong chart. All right, kids, I think that calls it 9:54. We're almost up to an hour, not quite. Let me just double check Twitter. Nothing on Twitter, nothing in my email. So nobody's asking for any other charts. Give you guys a couple seconds there in the room. See if you have anything else. Oh, BSX for Sylvan. Very nice chart here. This is the weekly. It's gorgeous. Got this left-right combo on this weekly and this J-hook pattern on this weekly here. Daily as well is very nice looking. I know that you are in this, and it's a great trade. Look at that. Nice breakout today of this move here. So nice little, I like the way these waves, you know, you have this bottoming in here, kind of a double bottom in here, and then it, you know, waved and made a higher low, and you have this bunch of moving averages in here all crunched together. Really like this look. Nice volume today too on this move. So looks pretty bullish. I think you've done a good job on that trade there, Sylvan. All right, everybody. I wish you all a great rest of your day. Happy trading to all of you. And I hope to see you back here. And for those of you who are in the chat room, I will see you in the chat room soon. Again, my name is The Trading Wife, and I want to thank BTFD TV for having this wonderful platform that we can use for these webcasts as well as the shows. I'm going to try and find time to do some more of these webcasts like this. They're pretty easy to do when I just do the charts. It takes a little bit more work for me when I want to get on camera, so I managed to not do that today as well. A lot going on at the end of the school year, but I could certainly do, I'll talk to the guys over at BTFD TV, and perhaps we can do 2 or 3 of these webcasts with just charts every week. Again, my website is thetradingwife.net. That's www.thetradingwife.net. One more, please, UNP. Okay. One more, UNP. Oh, that's not nice. Not nice at all. I'd say if you're short, you're loving it. You know, H. Here's your support line down here. Not sure if your show cut off. I see the broadcast is still going live, so I'm just going to keep going. This is, you know, a descending pattern in here. It's in a downtrend. Where this stops is hard to say. Clear support in this area down here around 96.77. Will it hold 100? 100 tends to be a level that people, you know, if it goes to 9, it'll go to 10. If it goes to 90, it'll go to 100. You have that $100 roll idea. So 100 tends to be a level that either holds or doesn't. If you're in the, I mean, you don't want to be in this at this point. It might reach support soon. If you've been in this for a long time, is a long time hold, and you're trying to figure out what to do. I don't know. I think these guys pay a divvy. I'm not even sure. Obviously, these guys have all taken a hit with oil as well. Just not doing well. And it's really not a good looking chart. When I pull this out to the weekly is not nearly as bad, is it? Because you can see that it had really taken a big move up in 2013 and 14. And now, you know, on the weekly chart, it just looks like it's consolidating. Some definite levels of support in here. If you're in this long term, you can hold it through these levels of support. But, you know, way back when, it lost the 8-week exponential moving average. And even if you thought that was, you know, not a place that you wanted to drop it. Certainly when it lost the 50-week moving average, you can see it. It hasn't done that in this whole move up. It may have lost the 8-week exponential at times, but it never lost the 50. Came down and tested it a couple times, but never lost it. So when this lost the 50, I think that was an indication. It was a blue ice failure at that point, as we call it, and probably needs to get back above the 50-day moving average before it's moving higher. So please be careful if you're in this. Make sure you give yourself a definite area that that you're not going to hold it any further, and let it go any lower than some of these support levels in here. I would try to be out of this, to be honest with you, if you can. Okay, so once again, www.thetradingwife.net. Please feel free to send me an email at thetradingwife@gmail.com. Follow me on Twitter at thetradingwife, all one word. Thanks again to BTFD TV. Hope you all have a great rest of your day. Ciao, everyone.